Got an idea for a tech product that you want to scale into a big business? You probably think that you need to go out and raise capital from an investor, right? Well, it turns out that you may not need to. And in today's Build episode, we're going to explore when it makes sense to reach out to investors. Welcome to Build, brought to you by Pivotal Tracker. I'm your host, Poornima Vijayashanker. In each Build episode, I invite innovators, and together we debunk myths and misconceptions related to building products, companies, and your career in tech. One misconception a lot of first-time founders fall prey to is thinking they need to reach out to investors the moment they have an idea. It turns out you actually don't need to reach out to investors, and you can get started by funding your idea on your own. In today's episode, we're going to dive in deep to understand some of the mistakes that first-time founders make when it comes to funding their idea. We'll also talk about what investors are looking for and when it makes sense to reach out to them. And to help us out, I've invited Erica Brescia, who is the COO and co-founder of Bitnami. Erica has also recently joined XFactor as an investment partner. And XFactor is an early-stage investment firm that's looking to fund female founders as well as mixed-gender teams. Thanks for joining us today, Erica.
Thanks for having me. It's great to be here.
Yeah. So this is the first time that you and I are meeting. Thanks for being here. So I want to know a little bit more about you. Let's start with your background. What got you interested in tech?
So I've always been very interested in gadgets.
Okay.
So it started out actually with mobile phones way back in the day, but I've always been curious about learning more about technology and gadgets and how things work. Like I really wanted to understand how mobile phone networks worked back in the day. Don't ask me why.
Sure.
But I went on to study investment finance. So kind of a different path than a lot of people in Silicon Valley take. But my father's an entrepreneur, and I always had it in the back of my mind. I wanted to start my own company. I got introduced to my co-founder and decided I was just going to help him work out a few kinks in the business and get it off the ground. And here I am now running a software company. So, it was really a case of being open to new opportunities, but also just having this lifelong interest in understanding how things work and learning new things.
Yeah, so let's talk about Bitnami, your current company. What exactly does Bitnami do and what inspired you to start it?
Bitnami is a catalog of open source applications that you can deploy on servers. So it's primarily like B2B software, things like maybe Moodle or Drupal or WordPress, if you're familiar with that. We also package up a lot of development environments and development tools. So things like Jenkins and GitLab, or a Node or Rails or Django development environment. And we have over 1 million deployments a month of the applications that we package, and we publish them both through bitnami.com as well as on all of the major cloud vendor platforms. And users choose Bitnami because they know everything is going to work right out of the box every time, and they get a consistent experience wherever they deploy the software. If I can just add one more thing to that, one thing I'm particularly excited about is up until now, we've been bootstrapping through our relationships with cloud vendors, but we're about to launch a new product for the enterprise. So we're essentially taking the next step in the company's evolution by productizing all of the automation that we've built to deliver this catalog of applications so that others can take advantage of it too.
So it sounds like Bitnami's been going strong for a long time. How long have you guys been around?
We've been working on the Bitnami part of the business since 2013, but the technology dates back about 10 years to when we started BitRock, which is the predecessor. So,
got it.
Yeah,
nice.
We do have several years in now.
Yeah, that's great. And as a COO, what's your day-to-day like?
It was funny when I thought through that question. There's no day-to-day, right?
Yeah.
I spent Monday and Tuesday in some really key BD meetings in Seattle. Yesterday, I was in LA for an open source conference. I'm obviously here today. The way that we have our kind of leadership roles between my co-founder and I might be different than a lot of other companies. So I run everything except for product and engineering. So that means that like marketing, sales, BD, legal, finance, everything rolls up to me that basically keeps things running and make sure that the company is growing and bringing on the right people and, you know, has revenue coming in and all those good things. But obviously, as a quickly growing startup that's very, very tech heavy, I'm still involved in everything, including product and engineering too. But there's never a typical day. It varies a lot, and the days are long, but a lot of fun.
Yeah, very good. And now you have actually taken on another role, right? So if Bitnami isn't enough, you decided to join XFactor as an investment partner. So tell us a little bit about XFactor and why the decision to go into investment.
Absolutely. So I'll start with XFactor and tell you about the fund, and then I'll talk about why I joined. So XFactor is a $3 million seed fund. We're making $100,000 investments in 30 companies, pretty easy math. And the genesis was really a woman named Anna and a guy named Chip. Chip's a partner with Flybridge, and they got together and wanted to find a way to fund more women in technology because they'd read some of the statistics about how difficult it can be for women to raise funding. And the truth is, it's really like a very untapped opportunity, right? There's a ton of brilliant women building some very interesting companies, and they were having problems in some cases getting through the traditional VC process because of some of the biases that we've all read about. We probably don't need to go through that. So the idea was that they were going to get together a group of operating female founders. I think that's really the key, is we're all women who have built and scaled our own businesses across a variety of sectors. I have a lot of experience in B2B and closing like very big BD deals, and I've acquired companies and things like that. Some of the other women are very heavy on the consumer side, and they're great at branding and rolling out new products. So we got a really diverse team of women, but who are actually still, you know, on the ground, running businesses, very in touch with the problems that founders have in getting new companies off the ground. So we think we have a pretty unique perspective and also an edge in terms of what we can offer founders because we're so close to the challenges that they're experiencing.
Right.
And we're very focused, obviously, with that check size on pretty early stage companies and helping set those founders up for success. We do expect most of them will go on to raise for their venture capital, and we're there to support them in doing that. You know, I actually haven't raised VC for my company, but all of the other women have. And so we have a good diversity of experiences and opinions around that too.
And why did you join?
So, you know, it took a lot of thought. They came to me at first. I thought they just wanted to run the idea by me back in February. And then I get an email a few days later saying, we'd love to have you join us. And, you know, I really did spend some time thinking about it and talking to my co-founder and my husband about, you know, whether or not I'd be able to balance everything, because it is a big commitment. And if I make a commitment, I want to come through on it and make sure that I'm not letting the founders and my fellow investment partners down. But it really came down to the opportunity, both for personal growth for me and to give back. And there's a financial opportunity too, which is fantastic. So I really saw that we have a pretty unique angle into both deal flow. You know, several of us are YC founders as well. So we have access to the YC network and obviously just good networks in Silicon Valley and outside as well. And I felt like we could do something really interesting. I could meet a lot more women in technology. And also, you know, I really do think there's a huge untapped opportunity there. And I think we'll be able to produce above average returns. So it really came down to like me asking the question, do I have time for this? You know, I'm going to get less sleep for sure. And that's definitely been the case. But it was just too good to pass up. Like, this is one of those things that I just couldn't say no to because the opportunity is so big and it's something that I'm enjoying doing so much. So
wonderful. Well, yes, as soon as I saw the news, I wanted to reach out to you guys because I thought it was fabulous and needed to be spread to everyone else.
Great.
So let's talk about your investments then. I know everyone's probably got different things that they want to invest in. We're going to talk to some of your partners later on, but let's talk about what you like to invest in.
Sure. You know, right now I'm very focused on things that I'm passionate about. You know, I think about whether or not the company keeps me up at night thinking about it later. And I am usually receiving all the deal flow that's on B2B and enterprise sales in particular, because that's where my expertise and experience is. But I found myself drawn to some other things too. And one of the investments that'll be announced soon, I wish I could name some of them. I think we're about to announce that we've made 8 investments in the first 2 months. So we've been very busy and we've met some amazing women. One of the investments that I've led so far is very much a technology kind of cloud-focused company, which is absolutely my bailiwick. The other one is a fintech company. And I was really drawn. I loved the founder, was very impressed by her and the team that she's put together. But also it was just the problem that they were solving, like I could see it so clearly, it was palpable. And I was staying up at night and I was talking to my husband about what they were doing and why I thought it was exciting. And kind of when I start thinking about how they can make the business successful and what they should be thinking about, that's a very good sign to me. So I know it's not a direct answer. Like I invest in this list of companies, but that's really not the way that it's worked out so far. You know, I've looked at a variety of like med tech companies, fintech companies, more women in technology and kind of sourcing and recruiting companies, some people doing interesting stuff with NLP. So it's really been a very diverse range of companies. And one of the things that I think you'll see us talking about more, which is very cool, is a lot of these companies are not what you would typically think of as like, you know, the women in tech companies. Like a lot of people think all we want to work on is beauty.
Right.
And look, I like makeup and clothes and everything as much as the next person, but that's not, I don't know anything about those businesses. And a lot of the deal flow that we've had, I mean, it's coming from all kinds of like very hardcore tech, a lot of VR stuff too, and AR. So we've seen a broad range, and right now we're looking for the next $1 billion businesses. Really, like any other VC, it's is this something I'm passionate about, and can it be huge, and can I add value in helping them make it so?
Yeah. So actually, that's a good segue into talking about, I think, one of the things that confuses some folks in our audience and even first-time founders is, what qualifies as a tech product, right? And then let's start there, and then we can talk about maybe what a big idea is.
Sure. I mean, almost anything these days is tech-enabled, and if it's not, you might have a scalability problem, right? Sure. I mean, I don't think we have very strict kind of definitions as to what is tech or not, but if excelling in technology and in the technical underpinnings of the product is going to give people an advantage, that's probably a tech company or something that we would think of as such, right? Like some of the subscription businesses where there's a food device I can't talk too much about, but that we're looking at, and a really novel subscription business around it. And another 2 companies have come through that are working on like breast pumps for women. And so, they're hardware companies, but there's a lot of technology, obviously, that goes into the hardware. And obviously a lot of tech powering how they're approaching the businesses. So it's really a pretty loose definition of what a tech company is. Even some of them are physical spaces now that we're looking at. So it's a pretty broad range. It's not like we're only investing in software or we're only investing in SaaS or something like that. Okay,
that's good to know. And so tech-enabled, but there's probably some conversation that needs to be had around, are you really just selling water online? Or, is there a distribution model that is tech-enabled? And it's cool if you sell water online. So Okay, got it. So then let's talk about, I think, another area, though, which is, you've already started talking about you enjoy the deals that are B2B, more enterprise, and maybe a little bit more SaaS heavy, right? I think one of the concerns that a lot of first-time founders have is, I just need to find an investor. I just need to find one investor, but they may not necessarily find that right investor. And it's interesting because it's not just limited to tech. I was reading Barbara Lynch's memoir, who's a restaurateur, and she talked about going and finding the investors who invested in restaurants for her 9 restaurants. So talk to me a little bit about that, what it means to be vertical focused as an investor.
Well, I mean, you want investors who understand your business, or at least have the capacity and time to learn about it, and who are upfront if they don't understand things too, right? So, I mean, there's several things that make people like good investors. One is, don't be an asshole. I hope I can say that on your show. But like, I just don't want to work with people who are not good people. And so, to me, some people don't care about. I've actually had people come to me and say, it doesn't matter. All VCs are going to be assholes. You just need to accept that and move on. And I'm like, No, I don't. There's a lot of great VCs out there.
That's the disruption, right?
Yeah, there are a lot of good people out there, men and women in venture capital. But I do think it's important that you understand somebody who understands your business and the cycles. And for example, we've had a lot of very hardware-centric businesses come through. And those are difficult to invest in particular if you don't have experience in hardware, because you don't have a really good understanding of how long it's going to take and what the development cycle should look like and how capital intensive that you're going to be. And so it's harder to make good investment decisions.
Yeah.
And it's harder to be helpful for the founder, because if you have unrealistic expectations for the type of business they're building, nobody wins. It's the same. We've seen a lot of robotics companies doing super cool stuff, but I've told them, look, I'm not an expert in robotics, and I'm going to have to go out. We do have an associate who does some work for us, but we have to go out and be willing to invest our time to get up to speed in those industries in order to feel comfortable making an investment. So it's good advice. I think what you're alluding to is find an investor that actually knows what they're talking about in your space, because otherwise they could really do damage by slowing you down, refusing to fund a second round or something like that, a follow-on, or just inundating you with questions all the time. And the last thing you want to be doing is just educating your investors on the market when you have a company to build.
Exactly. No, that's a good point. Now, let's talk about the other side of this, which is also, it's very tempting as a first-time founder or somebody who's green to have an idea. Whether it's hardware or anything that we feel is capital intensive, or sometimes we just don't even have the capital as a founder, right?
Sure.
We haven't quite got to that financial point of our life.
Sure.
So it's tempting to immediately say, oh my gosh, to get this thing off the ground, I need to go and get investment. That might not be the right time. Let's talk about what time horizon makes sense. And I know it's going to be product specific, but I think it would be helpful to just...
Yeah, I mean, it really depends on so many different variables. So one of them I think is important is to be realistic about where you are in your life and what kind of sacrifices you're willing to make. The reality is, if you have a family and a mortgage, it's a heck of a lot harder to, stop taking a salary, particularly if you were to work in Silicon Valley, because the salaries are quite high here right now, and go and start something from scratch. If you're 22 and right out of college and have none of those financial responsibilities, it might be, you might have more flexibility. I mean, my vote is do as much as you can before raising funding. Like, build as much as you can. First of all, there's so many good investment opportunities right now that I think most investors, they want to see, first they want to see that you're committed, right? And if you just go out with a pitch deck, like, well, I took 2 weeks of holiday from my job to put together a pitch deck, and if you fund me, I'll go do this.
Right.
You're never going to get funded, because we want to see conviction. We want to see that you quit your job, you're committed, you've been working on this with somebody else, preferably for 6 months. You have the personality and the skills and kind of the charm or whatever it may be, the conviction to actually get other people to join you. That's important too. And so unless you absolutely cannot do it without raising money up front, I would say get at least to a prototype or as far as you can to be able to go show people and prove to people that you're there for the long haul and that you're willing to make sacrifices to make something happen. I will also plug incubators like Y Combinator. Obviously I'm biased because we went through the program, but that was a great experience for us in terms of helping us just build some momentum, and we did rebranding of the company and accomplished a lot during that period. And it's not about the funding necessarily, but it can give people who are cash strapped a bit of cash to fund those first few months. But it really helps you to accelerate that initial process and sets you up very well to raise from VCs after the fact. We've certainly sourced a lot of our deal flow from YC. We try at XFactor to be very broad, and we've had people from all over the world, in fact, contacting us. But of course, we're going to look to YC because they've already been through that filter. They've achieved something during the period that they're in Y Combinator. It's like a 3-month kind of sprint. And so we found that, looking at people that have kind of at least gotten to the point where you would be if you've gone through a Y Combinator or similar, they've got something to show. Yeah. So that's when it makes sense. But I will say, and this is really the approach that we've taken with Bitnami, is try to find money from customers. Yeah. Let's not undervalue the fact that people will pay you for what you're building, hopefully, if you're building something valuable, and you're much better off going through that experience, learning what it takes to sell to people and, collect their money. There's a lot of details there, and try and build your business that way. Like, you don't need to go for VC right away. And there are great examples of companies that have been hugely successful doing that, like GitHub and Atlassian.
Yeah, I'm going to have you hold that thought. Because we are going to talk about that in a little bit. Now, the other thing I want to point out, because you said customers, but I think also bootstrapping with a paycheck to get off the ground. A lot of times people are worried about quitting their job and having a source of income. So using that, especially for businesses that are a little bit more capital intensive early on. So want to throw that out there. But I want to dive a little bit deeper into, this whole idea of, okay, I do want to get investment eventually. So let's say I have gotten to a point, maybe I've gotten to an incubator, or I've gotten it off the ground, I have some customers. But then there comes that period where you're talking to an investor and they may not really understand how big your idea is. And it's oftentimes the thing that people nitpick over and over again, that is this a big idea? Is this a big market? Or, sadly, people like to say it's a lifestyle business. And there's a stigma here in Silicon Valley against that. So let's talk about what exactly defines a big idea, if we can't even define it, because I know it's a little amorphous, versus a lifestyle business, and maybe even break that stigma of that lifestyle business.
Sure. Well, first I'll say I don't think there's anything wrong with like a quote unquote lifestyle business. And there have been a lot of deals that we looked at. There's this one amazing woman, I won't name the company, but she came through my network actually, and I looked at, and she developed some really interesting technology. And it was my belief, after talking to a lot of people, that she's going to sell the company for somewhere between $30 and $50 million within 2 years. Awesome for her.
Oh, yeah.
Not a great VC investment.
Why?
Right? Because we can't produce the kind of returns that we're looking for. We have LPs just like any other VC fund, and we have a responsibility to them to generate returns. And, I told this woman I want to help her in any way I can. She's incredibly bright. But I just couldn't see a path to them building $1 billion business. And that's really what it needs to be. Like, there needs to be a path that you can understand for how this can be huge, right? And it can be, it's going to be very risky. I should say, we always know that businesses are going to change and evolve, and you're very much betting on the founders. I mean, that's absolutely true. But at the same time, if there can have conviction around a specific idea, and we don't see how it can get to be a huge business, and some of the great hardware companies that we're looking at are like that, I think they will have fantastic businesses and fantastic exits. And I certainly wouldn't call them lifestyle businesses, because they're life-changing in terms of the returns that they'll create for the founders, but they may not be appropriate for a VC fund. And I don't think there's anything wrong with that. Right. You need to take a dispassionate look about, what you're building, how big the market really is, how much of it you have an opportunity to grab, and kind of be realistic about that. And then think about the kind of funding that makes sense. You might be able to find like a family office or something, or angel investors who are not looking for the same VC style risk and returns, and they'll be totally happy with a company selling for, 10, 20, $30 million in a couple of years. They'll double their money and everybody's fine, right? So
on that note, let's actually define what an LP is, and why, VC versus angel, so that people understand if they're not familiar.
Sure. So an LP is a limited partner, and they're the people that put money into the funds. And they're often, wealthy. Well, they always have some money coming from somewhere, I suppose, but often wealthy individuals. But depending on the fund, they might also be like pension funds or endowments and things like that from universities, or, different trusts and things like that. Right. So basically the people who put money into the hands of the venture capitalists, who are the people who actually invest that money. In the case of angels, angels, I think, have evolved a lot. And now we have like the super angels, and
we'll get into that in a future episode too. And I keep saying this, but it's going to happen. It's going to happen, guys.
Okay, I won't take us too far off course then. But there are a lot of different kinds of angels. So I was an angel investor before joining XFactor. I mean, not at a huge scale, but I'd made a few investments myself.
What's the scale?
I was writing like $10,000 checks, like smaller checks. And then there are people like, I'll take my father, who's one of my closest friends and heroes, and has inspired me to do all of this. But, he built a kind of brick and mortar contracting business that did quite well. And he's been making tons of angel investments in all kinds of different things, some tech, some very, very non-tech.
Yeah.
So you have people like that. And then you have people like Eric Hahn, for example. And my company did raise a bit of angel funding, primarily to get some really great folks involved with the company. And some of these people were like Elad Gil and Eric Hahn. Eric Hahn was the CTO of Netscape. He went on to be a very early investor in Red Hat. And since then has been one of the first checks into a ton of companies that have IPO'd. He was on the board of Red Hat after they IPO'd. Elad Gil's running his own company now, but he started and sold a company to Twitter and ran a bunch of stuff there. So these are people who have done well in their career, typically understand tech, and they make a lot more investments than somebody like maybe me or my father, who might have written a couple of checks a year. These people are doing several key deals a year, usually only investing their own funds. That's one of the big differences. They don't have LPs, it's their own money, but they might be doing it more at scale. And we call them usually like professional angels or super angels,
business angels.
Exactly, who are making a lot of investments, but they don't have LPs to answer to.
Great. So let's end with this question. When does it make sense then, when you think you have this big idea, to approach an investor? And I know you guys said early, but what is maybe too early, and what's a reasonable early to get a meeting?
It depends on what you need, right? So let's start with like, why do you need the money?
Yeah.
That's the first question you should be asking yourself.
Great.
Where is this money going to get you? And you better have a good answer before you go talk to VCs. Like, what milestone are you going to hit with this? Then the second question you should ask is, could I get it from anywhere other than VCs? Right? Do I have friends and family who might want to just give me some money? Could I even take out a loan? Like, sometimes these other things make sense. There are a bunch of diverse opinions on this, but my view is you don't take VC unless you absolutely need it, until it's holding you back from scaling. So in the particular case of Bitnami, for example, we've primarily bootstrapped. We've only taken $1 million in outside funding in total. I have over 70 employees in 12 countries. We're cash flow positive. We've built like quite a stable and steady business. But we are starting to talk about potentially raising venture capital because we're launching this enterprise product that I mentioned before. And that involves building out an entirely new part of the business. Now, I can do that off of cash flow, but I'll probably go a lot slower, and we see that there's a limited market or window of opportunity here. So I think it really depends on your specific case and whether you can do it any other way, or if there's an investor that you can feel or you feel can add a lot of value. So there are certain investors who might have a ton of experience in your space. Maybe they started an earlier company and exited it and are just itching for the chance to do it better now that the technology has evolved or what have you. If you find people like that, I think they can be really helpful to building the business. But otherwise, it's like you should raise when you need to raise. Or if you feel like you could run out of money in the near future and not be able to actually execute on your plan.
But let's admit, there is a time that's too early.
Oh, yeah. I mean, there always is. It's funny. We funded a company that was quite early at quite a high valuation. But and that's one of the deals I led actually. But I knew the founder, and he'd already built a successful company.
There you go.
And you're much more willing then, almost eager to get in, because this is a male-female team, and I happen to know the male better than the female. And I told him, like, I wanted into that deal because I think this guy has a ton of potential. And even though it was early, I would write him a check.
Sure.
But he's proven.
Right.
And that matters.
Exactly. I think that's a big stigma that, or rather, a big misconception around who's getting a deal, who hasn't built a product yet, or is not in the market. So it's great that you mentioned that. I think for most other folks, they need to see something. They need to see product. They need to see at least a concierge-like style minimum viable product or service, some cash flow, some customers.
Yes.
They really want to, like, those who don't have a track record need to step up their game and show a little bit more credibility.
Yeah, and the things I look at is, are they committed is the number one thing, right? I mean, starting a company is hard, and a lot of people underestimate how hard and how many sacrifices you make, and you could do a whole episode on what's involved in that. But like, are they committed? Can they build a team? I look at that a lot. And that's one thing where people who want to move to Silicon Valley who have no connections there, that's one of my questions is, how are you going to find people and convince them in a highly competitive job market to join your team? And, you know, if you can do that, it also speaks pretty highly of you and your ability to convince people and help them see the vision. And then can they build the product? And is it something people will pay for? Those are kind of the checklist items that I have. So the more that you can demonstrate, the easier the time you're going to have with fundraising, right? Yeah. If you can't if you can't prove that people will pay for your product, if you can't prove that people will use it, especially if you can't prove that you can build it, that's when we're going to have a lot of, you know, challenges getting to the next step. And that's when, you know, I try to give people a clean yes or no, but sometimes it's like, you're just not there yet. Yeah. And if you do these things, then I might be interested, but I'm sorry, I need to see more before I can make the call.
Yeah, I think that's fair. Well, thank you so much, Erica, for sharing all this information with us today.
Thank you for having me.
Okay, that's it for today's episode of Build. Be sure to subscribe to our YouTube channel to receive the next episode, where we'll continue the conversation and talk about when it makes sense to transition from angel investment to seeking investment from venture capitalists, and what you need to do in that interim period. Ciao for now. This episode of Build is brought to you by our sponsor, Pivotal Tracker. Welcome to Femgineer's Confident Communicator course introductory video series. I'm Poornima Vijayashanker, the founder of Femgineer.
And I'm Karen Catlin, a former tech executive who's now an advocate for women who are working in the tech industry.
For the last 22 years, I have been speaking in public, and for the last 8 within the tech industry. I have given a TEDx talk, I've been a guest lecturer at Duke's Pratt School of Engineering, an entrepreneur in residence at 500 Startups, a mentor in residence at Techstars, and was the founding engineer of Mint.com.
I am on my second career. In my first career, I spent 25 years building software products. I started out as a software engineer and over time moved to the executive level, where I was a vice president at Adobe Systems. Now, in my second career, I'm an advocate for women, which means I do a lot of public speaking about diversity, about women's leadership topics, and I've given a TEDx talk.
The Confident Communicator course is a live online course that Karen and I co-teach together. In this video series, we're going to give you a sense of what the Confident Communicator course is and what you'll get out of it.
You'll learn about the challenges Poornima and I have faced learning the craft of public speaking ourselves. You'll learn why we decided we just couldn't keep all of this knowledge to ourselves, and you'll hear from students who have taken the class about how they have become more confident communicators.
You're going to get a behind-the-scenes look at the entire course. You'll meet some past students and see how they went from being shy and nervous to poised and confident communicators. You're also going to meet employers and sponsors who found the course valuable enough to invest in and send their people. And finally, you'll get some sample lessons so you know the material that we're going to be covering. Sign up below to receive the first lesson immediately, where you'll understand why it's not good enough to just be heads down. You need to speak up to get the recognition you deserve. Ciao for now.